This is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. As I had mentioned in my last five or six or seven market updates on different topics, I addressed the S&P 500 in the U.S. stock market with a bearish outlook. I didn't make a call on the overall market, but I did suggest caution. Tonight, I'm going to talk about Reits, which is an area that I added to today. I would probably, if they're down tomorrow, I would be adding to them again. They held up very well in a bad market today. Uh, you know, I think I heard the news tonight, and they were saying that the market was down on recession concerns. And I thought that was kind of funny because uh, when Japan is down, I don't know, 6, 7, 8% in a day, and 2 days in a row like that, some funds, some bank is blowing up. So it really has nothing to do with any fundamental issues. It's all about liquidity, over leverage, all the things that have given me a 4-year negative divergence. But I'm not here to talk about that right now. I want to talk about REITs. I think it's somewhere where you can go add a little bit of money on this down move. I went neutral on utilities, on Southern Company, on copper, on AbbVie, all those things that were hitting new highs and things that were performing very well in a choppy market because they were overbought and they were down pretty good today. XLU, some of the other things. So anyway, let's get into it. The iShares Real Estate Investment Trust ETF, I'm showing this chart first. When I initiated on REITs back in July 5th, I didn't make this as a recommendation, but I showed the chart to show how the entire group was setting up for a move upward. And you can see we did get a breakout of this inverse head and shoulders, left shoulder, head, right shoulder, neckline, breakout. We're getting a retest now. The price projection based on this pattern is 112, which is 20% upside from here. Um, Today down, about 3%, but overall pretty close to its highs, recent highs over the last several years. So I still like this particular ETF. The two recommendations that I made back in early July was National Retail Properties, NNN is the symbol. And again, we have an inverse head and shoulders pattern here and a breakout. We initiated, let's call it 43, even after all the big down moves the last few days. We're at 46, let's call it. And the price projection based on this pattern is 52. It doesn't mean that it can't come down if the market comes down further, but this is a big consolidation that it broke out of going back, 3 years. So I like National Retail Properties. I added to that this morning and it almost closed back to its high. And the other, which has been kind of an underperformer, American Homes for Rent, it's basically break even from where I suggested it, maybe slightly higher, but it also has an inverse head and shoulders pattern, a left shoulder, a head, a right shoulder, neckline suggesting 46. And the right shoulder is also in the form of a ascending triangle. And so we got a nice breakout last week. And then today we got a pullback, gave me a chance to add to my position. It was down 1.7%. I think the market was down 3% or so, depending if you're looking at the S&P, the NASDAQ. So I like these three positions. They pay good dividends. And also, The upside is here. They usually do well in a defensive market. So that's my recommendation tonight. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Best of luck tomorrow and take care. Adios.